everyone, I'm going to show you how to reconcile inventory today. So first thing I'm going to walk you through is introducing you to a module called cost management. In cost management, in inventory value reports, if you select new, so we're going to add new. In this case, I already have one selected, so we'll do ID 60, and we'll do a monthly subledger recon. I've already got one created here, so we won't actually do it, but that's as simple as it gets, and it's this number 50. And the range I'm going to use is posting date, and I'm going to reconcile based on main account, but you could reconcile on financial dimensions if you'd like. You just simply select the dimension set that you want to work with. Now, for this demonstration, we are only reconciling inventory, so I only need to toggle material. And we want to see the transactions because if there's any discrepancies, I want to be able to reconcile my vouchers in my inventory value report to my vouchers in my general ledger. And so what this is doing is actually reconciling, an easy way to reconcile your actual transactions per month. So this should be done monthly. So once we have this set up, we're ready to run our report. So come into cost management, under inquiries and reports, under inventory value report storage. Now here I've already got a report for January, but it's as simple as coming here to new, typing the name of the month that you need to run the report for. And keep in mind, it's going to hold all of your months in this area, in this storage area, so that you can come in and review your transactions for any month that you'd like. But in this case, I've already ran this to save time. You can see that the setup worked. It's only pulling transactions for our product or material. And we're going to go to view details. Now, out of the box, this is going to look like this. I added columns, standard D365 functionality where you insert columns to pull in all of this. Now, you don't really need all of this. I pulled it in case I didn't need to do any research. It's kind of helpful, but inventory financial amount is really all we need for our reconciliation. Now, notice I have a $263,000 balance in my inventory. And if I come into my trial balance and I ran my trial balance, you can see my trial balance is $8 million. Why is that? Well, more than likely what you're going to do is you're going to know that this $8 million from the beginning of time is composed of other things besides what's on this inventory value report. I'm going to show you a few of those after we talk about this inventory reconciliation. So what I love about this reconciliation is this reference column. I have created a reference or attributes. I'm using it interchangeably. Here for attributes, you have all your attributes, and then I've created the posting types that go along with those attributes. And for this, the subledger is all our inventory value report, which means if I go into my vouchers, select all of these posting types, which I've done. Let's go back into our voucher transactions. Now I've used this wonderful save as and created this template here for all, and I named it inventory value report. And so now it has my main accounts, my dates. The only thing I'd have to change each month is really my dates. And it has all my posting types related to my inventory value report. I can select OK. And this number in my accounting currency should be what ties to my inventory value report. If it doesn't, you can export and do some reference checks from voucher here in inventory value report to voucher on your transactions. Isn't that beautiful? I'm going to drop this PowerPoint into the blog that I have for this inventory reconciliation. I hope it helps you. I know it helps me when I'm trying to reconcile a client's inventory because, as you know, it can get way out of hand with transactions, and so this is very helpful. But what are outliers? I put NGL inventory, but not on value report. You're going to have accrued purchases excluding sales tax. So this is going to be an outlier where you're going to have a report for your auditors to pull and reconcile to your inventory, accrued purchases excluding sales tax report. So this could be utilized in your inventory reconciliation as something that's not going to reconcile to your inventory value report, but you have a report that ties as a subledger, and this is cost of purchase materials received, and this is how you run that report. Again, this will be in the blog. Shipped, not invoiced. So these are also transactions that are posted to your inventory, but not on your inventory value report. So cost of units delivered, shipped, not invoiced. Now, depending on your company's processes, this could change a little bit, but this is what Microsoft's demo environment has in it, which I think that most companies kind of follow that standard design and functionality. But if they don't, it's going to be similar, but on whether it posts to your inventory value report or not. As what I meant by that is your cost of units delivered or your cost of purchase materials received. Materials in process, so this is for your production or manufacturing. So you're going to have a WIP report, and those are also going to be a part of your inventory GL balances, but they are not, they're more of a subledger report that you'll be able to have also for your auditors. So materials in process. Then you have work in process. So again, those, and now that I think about it, you might want to get rid of this work in process, right? Because this really shouldn't tie to your inventory. I'm going to leave it on there, but it might not tie to your inventory, right? Because it's work in process, not materials in process, but I'll leave it on there. And then production orders not ended. So those are also going to have some transactions that might affect your inventory if you're using manufacturing. And then this is the big one. So if you allow postings to your inventory, not from a subledger, then this is what could happen. And I think Microsoft did a good job in putting this example in there. Notice I have one ledger transaction for both of our inventory accounts that are $7 million. So that's why we have this $8 million balance in our inventory balance, on our trial balance, but it doesn't tie to any of these subledger reports that we have here because it directly came from the ledger. So if you see any posting types ledger journal in your inventory, that's kind of a, hey, let's look at these and talk about these. And then you have inventory movement journal, which posting types are typically inventory expenditure, loss, or profit. These are also sometimes used for data migration, so you might see them over time and think, what are these for? And that you'll probably see them newer when you go live. But here's Microsoft's kind of description of what this is for. Not really a subledger to tie these to. I put inventory movement journal, but just know that that's where they come from. So if you have any questions, feel free to reach out. I think inventory is kind of a hot topic amongst companies. So hopefully this inventory reconciliation helps. Have a great day.